So today we're very pleased to share with you the latest developments in the opening up of China's futures market by taking Shanghai Futures Exchange as an example. My presentation today will cover 4 aspects. First is a very quick overview of China's futures market in 2022. Second is about the access channels to China market. And third is the opening up progress of SHFE and INE. And fourth is the next steps we're going to take as we move forward. Back in 2022, we would say that the year 2022 was not an easy year for most of the global markets. The same is true for the Chinese market. In 2022, the cumulative trading volume and turnover of China's futures market reached 6.77 billion lots and 534.9 trillion RMB, respectively, which is equivalent to 78 trillion US dollars, down by 9.93% and 7.96% year on year. But in contrast, the international products in China's futures market recorded very good growth momentum. We'd like to take Shanghai International Energy Exchange, INE, for example. Here, I'd like to explain that INE is actually a subsidiary and international platform of Shanghai Futures Exchange, SHFE. As you can see from the figures, in 2022, the cumulative trading volume and turnover of INE increased by almost 60% and 87% year on year, making it the only commodity exchange in China that have recorded double-digit growth. And according to FIA, the trading volume globally in derivatives is still dominated by the Asia-Pacific region, especially China. And the trading volume in the Asia-Pacific region accounts for nearly 60% of the world's total. And here comes the first question. Where are we among global exchanges? As you can see from this slide, by the trading volume of exchange-traded commodity derivatives back in 2022, according to the statistics of the FIA, the top 10 commodity futures exchanges are as follows, and Shanghai Futures Exchange ranked number 3 among this ranking. And actually, all the top 3 commodity futures exchanges are from China, including Zhengzhou, Dalian, and Shanghai Futures Exchange. In terms of the performance of the contracts, actually, industrial metals are one of SHFE's advantages. As you can see, 8 out of the 15 industrial metals contracts are from SHFE, including rebar futures. This is probably the world's most liquid, physically delivered rebar futures contract. And we also have hot rolled coil futures, aluminum futures, zinc, nickel futures, copper futures, as well as stainless steel and tin futures. In terms of energy contracts by trading volume, SHFE's fuel oil futures, bitumen futures, and INE's crude oil futures and low sulfur fuel oil futures are also among the top 15 contracts listed, evaluated by trading volume. And in particular, INE's crude oil futures and low sulfur fuel oil futures had a very good performance last year. Their volume increased by 26% and 120% respectively last year in terms of trading volume. And speaking of agricultural contracts, as you can see from this slide, all the top 10 contracts by volume are from Chinese exchanges, and SHFE's wood pulp futures and natural rubber futures ranked number 9 and number 10 respectively. And this slide shows the product lines of futures exchanges in China. Currently, there are 107 products listed on China's futures market, including 74 futures and 33 options. Among them, 23 are specified domestic products, which are also known as international products, including 14 futures and 9 options. And in this slide, they are underlined with an asterisk. And for our exchange, we have 5 international products, and all of them are listed on INE, as I mentioned previously, including crude oil futures, bonded copper futures, low sulfur fuel oil futures, and TS20 futures, as well as crude oil options. And the crude oil futures is actually China's first international product open to overseas investors back in 2018. And apart from that, we also have another access channel that is qualified foreign investors. Last year, starting from September last year, all the futures exchanges in China opened 46 products to qualify foreign investors. And in this slide, they are tagged in blue. As you can see, they include 26 futures and 20 options. For our exchange, we opened altogether 16 products to qualify foreign investors, including 11 products on SHFE, such as steel rebar, hot rolled coil, copper, gold, silver, aluminum, zinc futures, as well as gold, copper, aluminum, and zinc options. And all the INE products are open to QFII as well. So altogether, it's 11 plus 5. Think about that. Just 1 year ago, last year at this time, we only have 9 international products open to overseas investors. But in a year's time, currently, we have 23 international products and 46 products open to QFIIs. So you can see that the Chinese futures market is broadly open, and the trend is very clear and direction is very clear. Once it's determined to open up, more products will be open to overseas investors. The speed can be very rapid as well. Next, let's look at the access channels to China's futures market. But before that, I'd like to share with you the opening up process of SHFE and INE. As mentioned previously, we launched the first international product, crude oil futures, back in 2018. But years before that, we made a lot of preparations because before that, the Chinese market is open to domestic investors. But if we are going to launch an international product, we have to make preparations at different levels in terms of trading policies, clearing policies, and physical delivery policies. So back in 2013, we established an international platform that is INE. And after that, we talked to different market participants and also government authorities, regulators as to how we can design an international contract to welcome those overseas investors. And in 2018, we launched that first product, crude oil futures. In the same year, we also completed overseas registration in overseas markets. For example, we completed the registration in Hong Kong, China, and in Singapore to facilitate the participation of overseas investors in these regions to our market. And it turned out to be very successful. And after that, we launched another 4 international products, including TSR20 rubber futures, low sulfur fuel oil futures, bonded copper futures, etc. And last year, together with SHFE, INE opened the 16 products to qualify foreign investors. And that last year, that was the first group of products to be open to QFII. And this year, we're also studying the second group to be open to QFII. And in terms of international products, we will also list more. For example, freight index futures. This will be a cash settled product to be listed on INE, and this will also be facing overseas investors. In addition, we are also working on LNG futures and options, but currently we're talking to different market participants in terms of contract design and rule design. We're also talking to the regulators as to how we can make this international product more accessible to the market. These are the 3 major access channels to China's futures market. First is to set up a wholly foreign-owned enterprise, we call that WFI, in China, and participate as a domestic client. In this way, because you are a domestic client, so you can trade all the 107 products listed on Chinese futures exchanges. The second channel is the specified domestic product channel, or we call international product channel. We have altogether 23 products currently. So in this channel, overseas investors can either open accounts through a Chinese FCM, such as Nanhua Futures, or they can also open account through overseas intermediaries, such as Nanhua UK Financial. And these overseas brokers will send the orders to a Chinese FCM and trade on our exchange. For the third channel is the QFII channel. Currently, we have 46 products available for this channel. Overseas investors need to first obtain the QFII license or qualification from the Chinese regulator, the CSRC, and then trade through Chinese futures firms. In recent years, we've seen a growing trend of interest in QFII participation in China's futures market, and this can be seen in this can be reflected in the number of new applicants of QFII in recent years. According to the list of qualified foreign investors released by the CSRC, by the end of April this year, there are 768 qualified foreign investors from 43 countries and regions. Most of them are from Hong Kong, China, the USA, and Singapore. And you know that on November 1st, 2020, the new QFII rule took effect. So starting from that period, we've seen a large number of new applicants. Altogether, 266 new QFII RQFII emerged. Most of them are from Hong Kong, China, Singapore, and the USA. You can also see from the slide, in Q4 of 2020, that was when the new rule took effect. There has been a surge in number of newly approved applicants in that quarter. And in 2 years' time, the number of newly approved applicants was almost half of the total number of approved QFII in the past 2 decades. So it shows the market has sent a very positive feedback regarding the new rule, which the new rule said that the QFIIs will be allowed to trade in China's commodity futures market. And actually, now at Sheffield and INE, we've seen some QFII clients already open accounts and trade at our products, and we expect that the number will going to increase very gradually. Regarding the profile of those QFII clients, we've seen that most QFIIs are financial institutions such as banks, investment firms, funds, asset management firms, securities firms, trusts, and insurance firms. But starting from Q4 late last year, we've also seen new applicants such as industrial clients, clients with physical background, obtaining QFII qualification from the CSRC. So the profiles of those QFII clients are becoming more diversified. And although QFII cannot take part in physical delivery currently, they can apply for hedging quota from exchange. So we guess that those companies that have exposure to the Chinese market, who have trade with China, they want to find more access channels to the Chinese market, and the QFII channel provides another channel for them for risk management. Here is the products on Sheffield and INE that are open to QFII. Some figures, some basic information. You can see that actually these contracts, the first group of products that we open to QFII are all very liquid contracts, and they all have a very good basis for internationalization. And as mentioned previously, currently this year, we're also studying the second group of products to be open to QFII and RQFII. We're still talking to the regulator. We hope that in the second half of this year, more products will be open to QFII. And here comes the question, having talked so much about the QFII channel and the international product channel, what are the differences between their access channels? As you can see from this slide, on the left is for the domestic clients. Just now I mentioned that one of the access channels will be to set up a WFI in China and participate as a domestic client. So in this way, those domestic clients need to open account through Chinese futures firms, such as Nanhua Futures. And for QFII, according to the current rules and regulations, QFII also need to open account through Chinese futures firms only. But for the international products, their access channels might be a bit more flexible. For example, for an overseas client, they can either open account through a Chinese futures firms and then trade on INE. They can also approach the overseas intermediaries. We call them OIs. They are actually overseas brokers registered with INE. They can open accounts with overseas intermediaries, and those overseas intermediaries will send their orders to the Chinese futures brokers and then trade on our exchange. The overseas intermediaries can also send the orders to overseas special brokerage participants, OSBP. They are just like our overseas trading members, quite similar to our trading members overseas. This slide tells more about the differences between these two channels. As you can see, in terms of the participants under the QFII channel are overseas entities with QFII RQFII qualification, but under the specified product channel, the participants are broader in scope. They can either be overseas individuals or general and special corporate clients. And in terms of qualification, clients under the QFII channel need to first obtain the qualification approval from the Chinese regulator, the CSRC. But under the specified product channel, there's no need for such approval by the CSRC. And in terms of account opening method, as mentioned previously, QFII clients need to open accounts through Chinese futures firms. But under the international product channel, they can either open account through Chinese futures firms or through overseas intermediaries or OSBPs. And in terms of margin currency, QFII can only use RMB as margin, but for the specified product channel, in addition to RMB, clients can also use US dollars as margin. In terms of investment products, the QFII channel has more benefits than the specified product channel because more products will be available under this channel. There are altogether 16 products on our exchange that are open to QFII, but under the specified product channel, only 5 products are available. And in terms of physical delivery, currently QFIIs are not allowed to take part in physical delivery, but under the specified domestic product channel, those who cannot make delivery or accept the invoices required by the exchange cannot participate. But those can make delivery or accept the invoices have already taken part in physical delivery. We've seen very large domestic and overseas industrial clients already taking part in the physical delivery of our products. Next, let's look at the opening up progress of SHFE and INE in the past few years. The INE market is growing very fast. We've seen that the average daily trading volume of all INE products have year-on-year growth since their listings, as you can see from this slide. And we've also seen increasing overseas participation. And the overseas clients are dominated by industrial clients, which is pretty different from our domestic market. And the overseas clients' contribution to trading volume and open interest keeps increasing. These are our overseas brokers around the world. On the onshore market, we have 150 domestic futures firm members. And on the offshore market, we have altogether 79 overseas intermediaries and 3 overseas special participants spanning over 12 countries and regions. For example, in UK, we have 12 overseas intermediaries, and Nanhua Financial UK is one of them. And the other 2 destinations with the largest number of overseas intermediaries are Singapore and Hong Kong. In terms of market participants, currently our overseas investors come from over 20 countries and regions in 6 continents, and their client types are quite diversified. We have not only industrial clients, but also trading houses, financial institutions such as big banks, but also retail investors. And most overseas investors open account through overseas intermediaries shown in the previous slide. And we've also seen a very healthy participant structure in some of our products. For example, let's take INE crude oil futures, for example. The institutional investors account for about 50% of the average daily trading volume and over 70% of the average daily open interest. And in terms of overseas participation, we see that overseas traders account for about a quarter of the average daily trading volume and over 30% of the average daily open interest. In some of our products, they're gradually becoming the pricing benchmark for physical trade. For example, Bonnie Copper futures and TSR20 futures, their price has been used as a benchmark in the quotation and settlement of cross-border trades by some industrial clients. And we've also seen that a lot of industrial clients use SHFE and INE's futures contracts as part of their hedge financing strategies. And we're glad to see that enterprises use our contracts for risk management. In the past few years, with the opening up of our market, we have also received quite a lot of global recognition. For example, last year, both SHFE and INE was awarded Chinese Exchange of the Year by FOW Asia, and INE's crude oil options was awarded Innovation of the Year by Energy Risk Asia. Apart from that, we're actually involved in the global futures industry. We completed overseas registration in Hong Kong and Singapore, and both SHFE and INE are included in ESMA's list of third country venues in the context of opinion on post-trade transparency with a positive list, which all these recognition will facilitate the participation of investors in these regions to our market. And we are also active participants in the World Federation of Exchanges and the Futures Industry Association. And we are also qualified central counterparty approved by the China Securities Regulatory Commission. And we, both SHFE and INE, have established a standard and complete CCP clearing mechanism according to the PFMI requirements of IOSCO. Moving forward, we'd like to list more international products, such as freight index futures. Previously, I also mentioned that we're also working on LNG futures and options, but currently we're still talking to different market participants and the regulator as to how to design the contract and the rules. But the direction is very clear. More international products will be listed on our platform, and we will also list more new products in different sectors and introduce flexible trading tools and reference prices to our market participants. For example, in our crude oil futures, we introduced TAS, trade as settlement orders. And we expect to introduce these reference prices or trading tools to other products this year. And we also released monthly average settlement prices on crude oil futures, TSR20 futures, low sulfur fuel oil futures, etc., in the hope that we can provide more reference prices for the industry. In addition, because now the pandemic has gone and a lot of Chinese companies and Chinese futures exchanges are going out to tell people what's happening on the Chinese market. So we will hold more diversified forms of overseas marketing activities together with our members overseas and their branches overseas. And we will co-organize such kind of overseas marketing events together with them. And in addition, we ourselves will release more English investor education materials because we know that a lot of investors tell us that language issue is one of the biggest obstacles when they accessing the Chinese market. So we think that in this regard, we will have more English investor education materials facing overseas investors so that they can have a better understanding of our markets. In addition, if you have any questions, you can also approach us. These are the official website of Sheffield and INE, and this is also our contact information. If you have any questions, you're welcome to approach us and ask any questions you want to understand. And on the right corner of this slide is our mailing list. You can also scan to join our mailing list. Subscribers will receive the monthly market data from INE Markets and some events, webinars, etc. So we are quite actually involved to engage with different market participants. Okay, so today, this is a brief introduction from my side. Again, thank you very much for attending today's event, and it's also my pleasure to take this opportunity to give a general introduction on the Chinese futures market. Hope you find today's presentation helpful. Thank you.